Today's update is important, and I want to speak to you clearly and directly from the very beginning. There has been growing attention around January 29th and the IRS payment schedule, especially among seniors who rely on Social Security, supplemental security income, Social Security disability insurance, Veterans Affairs benefits, and other fixed incomes. Many people are hearing the word stimulus again and wondering what it really means this time, who is included, and whether payments are arriving sooner for some people than others. This update will explain what is officially happening, what the IRS schedule actually affects, and how seniors should understand January payments without confusion or unnecessary worry. Over the past several weeks, financial headlines and online discussions have mixed together different topics, including tax refunds, recovery credits, benefit adjustments, and past stimulus programs. For many older Americans, this has made it harder to tell what applies to them and what does not. That is why it is important to slow things down and explain each part carefully using clear language and real facts so you can understand how January 29th fits into the bigger picture of IRS payments and senior benefits. January is always a sensitive month for seniors because it often brings changes. Cost of living adjustments take effect, Medicare premiums are updated, tax reporting begins, and benefit notices arrive in the mail. When people hear that the IRS has a January 29th schedule, it naturally raises concerns about whether money is coming, whether action is required, or whether something could be missed. This script will help you understand what January 29th represents and what it does not represent. First, it is important to understand how the IRS operates at the beginning of each year. January marks the official start of the tax processing season. Even before most people file their tax returns, the IRS begins internal payment cycles related to credits, adjustments, and previously authorized payments. These payments are not all the same, and they do not apply to everyone in the same way. Some are automatic, some are corrective, and some are related to prior filings. When people refer to a January 29th stimulus, they are often talking about IRS payment activity tied to refundable credits or adjustments that were approved earlier, but scheduled for release during the late January processing window. This does not mean a brand new stimulus law has been passed. It means that money already authorized under existing programs is being released according to IRS timing rules. For seniors, this distinction matters. Many older adults do not file taxes every year because their income is limited to Social Security or retirement benefits. Others file only to claim credits or report small amounts of additional income. The IRS payment schedule affects these groups differently, depending on how their records are set up and whether they were eligible for certain credits in prior years. One of the most common sources of confusion comes from the recovery rebate credit. In previous years, this credit allowed people who missed stimulus payments to claim them later on a tax return. While the main stimulus checks are no longer being issued in the same way, the IRS still processes corrections and delayed credits for individuals whose records were incomplete or adjusted. These corrections often appear early in the tax season, which is why late January draws attention. Another factor is refundable tax credits tied to income thresholds. Some seniors qualify for refundable credits, even if they owe no taxes. When these credits are processed, the IRS issues payments that can look like stimulus checks, even though they are technically tax refunds or credit payments. The timing of these payments often depends on when the IRS finalizes internal verification steps. January 29th is one of the dates associated with the IRS opening full processing for certain categories of payments. This includes refunds that do not require additional review and adjustments that were already approved. People who are paid first are usually those whose information matches IRS records exactly and does not trigger manual checks. For seniors who receive Social Security, supplemental security income, Social Security disability insurance, or Veterans Affairs benefits, It is important to understand that these benefits are not paid by the IRS. They are paid by separate federal agencies on their own schedules. The IRS does not control monthly Social Security deposits. However, the IRS does interact with benefit data when determining eligibility for certain credits or payments. This means a senior could receive a payment from the IRS and a benefit payment from Social Security in the same month, but they come from different systems and follow different rules. Understanding this helps prevent panic when deposits arrive or do not arrive on the same day. Many seniors are also concerned about whether they are first in line for January 29th payments. The truth is that the IRS does not prioritize people based on age. Instead, payments are released based on processing status. Those who filed earlier, had clean records, or were part of automatic adjustment batches may see payments sooner. For seniors who do not file taxes at all, IRS payments are less common unless a specific credit applies to them. In most cases, if a senior did not file a return and did not claim a credit, there is no automatic IRS payment scheduled simply because it is January 29th. Another area of confusion involves pension income and how it interacts with IRS schedules. Pension payments come from employers, pension funds, or government retirement systems. These payments are not controlled by the IRS. However, taxes withheld from pensions are reported to the IRS, which is why some seniors associate pension income with IRS activity. In January, pension recipients often receive annual tax documents that summarize the previous year's income. This reporting process happens at the same time the IRS opens its processing systems. While these events happen together, they are separate functions. Seniors who rely on fixed incomes are understandably cautious about changes. A delayed payment or an unexpected deposit can feel alarming. That is why it is important to know that IRS January activity is routine and planned. It does not mean something is wrong with your benefits, and it does not automatically mean new money is coming for everyone. At the same time, some seniors will receive payments during this period. These are typically individuals who were owed money from prior filings, corrections, or approved credits. The key factor is whether the IRS already has authorization to release funds to that person. Direct deposit recipients usually see payments sooner than those who receive paper checks. This has been true for many years and continues to apply in January. Seniors who previously set up direct deposit with the IRS for tax refunds are more likely to receive any eligible payments quickly. Paper checks, on the other hand, take longer and may arrive weeks after the processing date. This delay often causes confusion as people hear about January 29th, but do not see anything in their mailbox immediately. Understanding the difference between processing dates and delivery dates is essential. Another important topic is fraud prevention. The IRS applies extra verification steps to protect against identity theft. If a record shows inconsistencies, a payment may be delayed for review. This does not mean the payment is canceled. It means the IRS is ensuring the money goes to the correct person. Seniors are often targeted by scams during tax season. When headlines mention stimulus payments or IRS schedules, scammers take advantage of the confusion. It is important to remember that the IRS does not call, text, or email asking for personal information. Legitimate payments do not require fees or confirmations over the phone. As January continues, more information will circulate online. Not all of it will be accurate. Some content exaggerates routine IRS activity to create urgency or fear. Seniors should rely on calm explanations and verified processes rather than sensational claims. Now that we have explained what the January 29th IRS schedule actually represents, it is important to understand how this timing connects to the everyday financial reality of seniors across the United States. Many older adults depend on steady monthly income, and even small misunderstandings about government payments can cause stress. This section will focus on how IRS activity in late January interacts with Social Security, supplemental security income, Social Security disability insurance, Veterans Affairs benefits, pensions, and tax-related income in a clear and realistic way. First, let us return to Social Security and related benefits. Social Security retirement payments, supplemental security income, Social Security disability insurance, and Veterans Affairs benefits follow their own legally defined payment calendars. These calendars are not changed by IRS schedules. January 29th does not replace, delay, accelerate, or reorder Social Security payments. If your Social Security payment normally arrives on a certain Wednesday or on the first of the month, that schedule remains unchanged. However, many seniors notice IRS payments because they arrive separately from Social Security deposits. This is where confusion often begins. An IRS payment is usually related to taxes or credits, not monthly benefits. When an IRS deposit arrives in January, it is typically connected to a prior tax year adjustment, a refundable credit, or a correction that was already approved. For seniors who file tax returns, even if income is low, January is when the IRS begins finalizing records. Some seniors file returns only to report Social Security income, pension income, or small amounts of interest. Others file because they qualify for refundable credits. If the IRS identifies an overpayment, correction, or credit owed, that payment can be released during the late January processing window. It is important to understand that these payments are not random. They are not new stimulus programs. They are part of existing tax law that allows the IRS to send money when a taxpayer is owed funds. Seniors who did not file a return or did not qualify for a credit should not expect an IRS payment simply because of January 29th. Another issue that affects seniors is tax withholding from pensions. Many retirees have taxes withheld from pension payments throughout the year. When they file a return, the IRS compares withheld taxes to the actual tax owed. If too much was withheld, a refund is issued. If a return is processed early and no review is required, that refund may be released quickly. This is why some seniors hear that people are getting paid first. In reality, those who are paid first are simply those whose records are complete and match IRS systems without any issues. Age, retirement status, or benefit type does not place someone ahead or behind in line. For seniors receiving supplemental security income, it is especially important to understand that supplemental security income eligibility is income-based. IRS payments can sometimes count as income depending on their source. Most tax refunds and credits do not affect supplemental security income eligibility, but reporting rules still apply. Seniors should always keep records of any IRS payment received, so it can be explained if needed. Social Security disability insurance recipients face similar concerns. Social Security disability insurance is not income-based in the same way as supplemental security income, but unexpected payments can still raise questions. The key point is that IRS payments related to taxes are separate from disability benefits and usually do not reduce them. Veterans Affairs benefit recipients also experience confusion during tax season. Veterans Affairs disability benefits are not taxable and are not controlled by the IRS. However, some veterans receive pensions or other taxable income alongside Veterans Affairs benefits. IRS activity in January does not change Veterans Affairs benefit schedules, even if an IRS payment is received. Now, let us talk about what seniors should and should not do during this period. Seniors should not rush to take action based on headlines alone. There is no requirement to call the IRS, file extra paperwork, or confirm eligibility just because January 29th is mentioned. Taking unnecessary action can create stress and expose seniors to scams. At the same time, seniors should review any official mail they receive carefully. IRS letters often arrive after payments are processed, explaining what the payment was for. These letters are important and should be kept for records, especially for tax reporting and benefit reviews. Bank statements should also be reviewed calmly. If an IRS deposit appears, it will usually be clearly labeled. Seniors should compare the amount with their tax records and keep documentation. If something does not make sense, it is better to wait for official correspondence rather than assume an error. Another concern seniors raise is whether IRS payments are taxable. In most cases, tax refunds are not taxable because they represent a return of money already paid. Refundable credits may or may not be taxable, depending on the specific credit and individual circumstances. Seniors should keep records so this can be handled correctly during the next tax filing. January is also when Medicare-related costs are updated. While Medicare is not managed by the IRS, changes in net income after tax withholding can make seniors feel like something has changed. Understanding that these systems operate independently helps reduce confusion. Some seniors worry that receiving an IRS payment means their benefits will change or be reviewed. In most cases, this is not true. Routine IRS payments do not trigger benefit reviews. Reviews usually occur due to reported income changes, not tax corrections. As we move deeper into the tax season, more people will talk about refunds, credits, and payments. Seniors should focus on what applies to them personally. Not every announcement applies to every household. Understanding your own income sources is the best protection against misinformation. Another important topic is patience. IRS processing happens in stages. Some payments are released quickly, while others take longer due to verification. A delay does not mean denial. It means the system is working through checks designed to protect taxpayers. Seniors should also be cautious of anyone claiming they can speed up an IRS payment for a fee. No legitimate service can do this. Payments follow IRS rules and timelines, not private promises. In closing, the key takeaway is that January 29th is a routine IRS processing date within a larger system. It does not signify a new stimulus or a change in benefit schedules. Seniors should approach this time with calm awareness, reviewing their own financial situation without anxiety. By separating fact from fiction and relying on official sources, you can navigate tax season with confidence and security. Remember that your primary benefits continue on their normal cycles, and any IRS payment you might receive is likely tied to past tax activity. Stay informed through trusted channels, protect your personal information, and always seek clarification from reputable advisors if doubts arise. This measured approach ensures that you remain financially steady and peace of mind intact throughout the year.